Welcome, everybody, to the AI in NYC podcast. I'm Rob May, one of your co-hosts. I'm the CEO and co-founder at NeuroMetric.
I'm Anna Kirk. I'm Chief of Staff at Nadia Partners here in New York.
And I'm Ryan Eppley, co-founder CEO of Root Access.
Welcome to the AI in New York show. The show is really looking at anything at the intersection of AI in New York City, who's working on interesting things and what the impact of that may be on the city.
And this is a reminder, if you are a startup founder, send us your merch. We will wear it on the show and we'll give you some shout out. And I think we got a large, extra large, and medium. So send us it in and we'll be wearing it on the next episode.
Cool. Well, our guest today is with a company here in New York called Thomson Reuters. They have a venture fund, and he's going to talk a little bit about how they think about AI in the context of Thomson Reuters Ventures. So Joe Dormani, welcome to the podcast.
Thanks, Rob. Great to be here. Excited for the conversation, guys.
So the first thing I want to start with is I think Thomson Reuters is one of those companies that everybody's heard of and is not entirely sure what you do and what business lines you have. So like tell us like home base, what the company.
Yeah, and you can imagine what like Thanksgiving conversations are like for me when we talk about what I do for work. So yeah, totally get it. Yeah, look, Thomson Reuters, great corporation. I think we're most well known for Reuters, the news, which is the biggest part of the brand, but it's actually the smallest part of our P&L. So we actually do a lot of different things. We have 3 core business verticals. So we sell information-based products and software for legal professionals. We sell corporate tax software and software for corporate legal departments in our corporates business. And then we have a tax accounting and audit professionals business where software information-based products for tax and accounting professionals, CPAs and audit professionals.
All right. And so a couple of years ago, you guys spun a venture unit out of that's funded off the Thomson Reuters balance sheet you mentioned earlier. Is that targeting financial returns, strategic alignment, M&A? Like, does it have to tie back to the TR business lines or not? Like, how do you guys operate?
Yeah, so TR Ventures, corporate venture fund, you could think of us like any other VC. It's a financial vehicle, so we're investment returns driven, but we invest in and around the markets that the corporation operates in. So it's where we feel like we have an information advantage, where we feel like we have a really strong understanding of the customer dynamics in those markets, and where we feel like, we can help the companies that we ultimately invest in. So Series A focused fund, $3 to $7 million initial checks, focused on legal, tax and accounting, fintech, risk, fraud, and compliance, things that are in our core markets. And you could think about things that are adjacent, and then strong emphasis on machine learning, in particular natural language processing, task and process automation.
Is there any New York-based investment that you've recently made in the last year or two?
Yeah, absolutely. I mean, we're pretty heavily, in the New York tech ecosystem. So we meet with a lot of New York-based tech founders. We invest locally, obviously. We're an international company, so we do invest in the United States, Canada, and abroad in LATAM and Europe and Southeast Asia. But Noetica is a great example of a New York-based company that we invested in. They focus on corporate debt. They analyze corporate debt agreements, so they are able to quantify the risks that exist in terms for corporate debt agreements. Super complex documents, 300-400 pages, and they have a really strong team, both on the AI side and the business side. The CEO, Dan, was a practitioner at institutional investment and white collar law firm, so he's kind of lived the reality of what these practitioners do, and they've just built a phenomenal company that's just kind of ripping right now.
Well, one of our articles later is about these like circular agreements with OpenAI and NVIDIA and all that. So maybe we should have him on and have him take a look at that, run those agreements through there and see what they say.
Absolutely.
That'd be cool.
Yeah.
So how are you seeing AI play out right now within Thomson Reuters across different business units? I mean, obviously only speak to things that you're able to, but are you seeing a lot of adoption? Is there activity right now, or is it kind of a wait and see approach?
Totally. Yeah, look, so like we are, squarely in the middle of AI innovation on many different fronts. The strategy for the company is kind of all in on a build, partner, buy, and invest strategy. So we're at the forefront of AI development for professional services in legal and tax. We are partnering with some of the best companies in the market. In partnership with us as the venture fund, we'll do investments. For example, Noetica, we partner with them, resell their product to law firms. And then, we acquire companies. We recently announced the acquisition of Additive, which is a great AI company in the K1 tax space. Not New York based, but they're San Francisco based, but still a great company and a good example. And so, we are pretty much all in on AI adoption internally as well, and in developing alongside our customers. We're like really lucky in the respect that we have great relationships with our customers. They look at us as, like strategic advisors and to help them navigate. I mean, there's tons of complexity happening in these markets, right? Like tax and legal, some of the areas that have been, publicly, people, folks like Goldman have said, like, these are some of the areas that, is going to see so much change with AI, and they're looking for partners to work with them to help them navigate what that actually means. And so, we are that trusted partner. So we work very closely with our customers around like what products to try, how we could potentially co-develop something for them and their clients, like, really broad spectrum for the way we work with customers. So, it's happening very, very quickly. And I think there's just a ton of value and opportunity.
For you specifically, like, how are you using AI day to day? Is this something that you're using for deal flow? Is it something for analyzing deals? Like, how do you actually leverage it? Not a theoretical, but like you're sitting behind your computer, not on the podcast today. How are you using AI?
Yeah, look, I mean, I'm a bit of a, geek. I like to kind of tinker on things. And so I have come to start thinking about AI as a team member. And it's like, what are the things that I need to do in a day? Which things will I ask AI to do, and which things will I ask my team members to do? I'll just give you a really practical example. I'm doing a panel discussion at a customer event, and I came up with an outline for the things I wanted to cover, and I wanted to come up with some great questions to make myself sound smart. So I asked the AI to help me with that while I worked on a diligence memo with my team. So like that's one example, but I have custom agents for market research, for finding companies. I work generally on Claude. We're lucky enough to have an enterprise account with Anthropic, but I've worked with many of the different tools, so not a specific endorsement there. But I've found a lot of productivity gain from just being able to create sort of targeted projects that do a very specific function, and the ability to kind of automate that just increases the bandwidth for what I'm able to do in any given day or week. So some examples, happy to go deeper on.
Yeah, no, I just love how direct you can be without any like human emotional kind of thinking. It's just like, I need this done. Please spit out like some answers. It's just so nice to be direct about it.
Totally.
No politicking.
Yeah. 100%.
You find yourself doing similar? Because I know you do a ton of market research with your investment thesis.
Yeah, all the time. And actually what I was going to mention, speaking of direct, feel free to admit this if I'm not allowed to say this on a podcast, but I did hear a while back that I think it was revised in GPT-5, but AI models were found to be more performant if you threaten to kill their family. So we
saw that. So at my last company, we were so this was like 2023 timeframe. So a lot of these models and the APIs were new. And we found out that if you made threats, it would respond better over the API if you put threats in your prompt. Like that was a real thing.
So how did you find that out for yourself? What threat were you making to the AI?
Okay. I actually was listening to another panel. Full disclosure, this is not something that I'm like doing on a daily basis.
Yeah, you haven't had just Anna threaten
publicly.
you randomly.
Yeah,
like she just works it in a conversation all the
we're
time.
not close enough yet, right? We'll get there eventually. Joe, I feel like we're in such a bubble, and so it's easy to get caught into an AI echo chamber. I love talking to folks like you who kind of can see a little bit of a peek behind the curtain in terms of how business leaders are actually using AI and reacting to AI, in particular, how that can change depending on the persona at a large financial strategic. So, like the CTO probably wants to build a lot of this themselves. That could differ from like the CIO whose mandate is just to find new tech to invest in. I'm curious kind of what you've seen of different business leaders in the industry, whether that be at TR or elsewhere.
Yeah, no, it's a great question. I mean, I think like the first thing to kind of understand is like AI, well, at least like in the context of like, business and, in our world and the way we do work, is first and foremost a tool. And like any other tool, if you pick it up and don't know how to use it, you're not going to be very good at using it. So you have to invest in using the tool. You have to put, time and potentially, dollars into, becoming proficient with that tool. And through that proficiency, you'll get a lot of the benefits. So, I mean, yeah, look, there are many areas of our business where we've been using AI for decades, by the way, search, specifically with like the types of, online information-based products that we have, we've been at the forefront of, natural language-based search algorithms. And so, there are areas in TR where folks have, decades of expertise in, PhDs and ton of practical experience in building products, and we have a great executive team that helps support the use of AI from top down, and so we have budgets for experimentation. So it's like different functions have different use cases. For our product team, they do a lot on the customer research side, a lot of expert calls, a lot of AI to sort of synthesize the information that they get through things like that to understand what features to build, what things to prioritize. Plenty of things on the information security side. Our CTO, and the engineering folks at TR are world class. Some of the folks at the forefront of AI have adopted a lot of these tools in AI development. So it's like different. I think it's very much aligned with sort of like the functional alignment. For any sort of function that has a set of tasks to do, there are a variety of different tools that they can be using to help them accomplish what they're trying to do.
Maybe on the flip side, because I feel like everyone's saying they're adopting it all over the company. Where do you think it's not being adopted yet, or there's at least like friction to get it going?
I think the areas where there are the most opportunities for more adoption are in finance, in the in the areas of work where there's like calculations that are required, because the predominant forms of AI that many people are using for the most part aren't great at some of the more intricate types of calculations you would be doing for like tax preparation or FP&A or forecasting, things like that. So I think like those are some of the areas where I see opportunity for more, but I think some of the technology has to come a little bit further to really be able to kind of adopt that at scale.
I'm surprised you didn't say engineering, because I feel like in engineering it's very split. There's people that are like, these coding agents are changing the world, and there's people that like they're terrible.
Well, there have been religious wars in the engineering department for many, many, many years.
Every time a new language comes around, right? It's Python versus Ruby.
Exactly.
Well, that's also it brings up an interesting question around build versus buy. Like that's a tension that we saw, especially, in one of my last roles, I was also investing on behalf of large financial services companies, and it was quite divided. Like I'm curious how your internal conversations are progressing in terms of do you build this type of tech? Do you replicate it in the sake of being a little bit more security and privacy cautious, or are you willing to look at different third-party vendors in the space?
Totally. Depends on who you ask, right?
Yeah.
No, I mean, look, I think where we encounter that conversation the most is actually in the areas that we invest in that are, close to the core of our business, or like direct, very close direct adjacencies, because those are the areas that could potentially be on our roadmap. And so we work very hard and very closely with our product and engineering team to make sure we don't invest in competitive tech. We want to be investing in things that are complementary to the core areas of focus. So, and our chief product officer is actually on our investment committee, David Wong, phenomenal AI mind, by the way. You should have him on the pod. He's second to none. But we work very closely with him, and we have really strong governance around investing in something where there'd be competitive overlap. I mean, you can't be perfect because roadmaps change and startups pivot, but we do make a strong effort to kind of address that. And so we build where we think we can differentiate, where we have unique advantages, and where our customers direct us as a priority for them. And then we will buy things that are complementary. We will invest in things that are complementary, adjacent, and can accelerate. That's the basic framing.
How do you think about that particularly on the investment side, with the idea that like AI is moving really fast? And I think, and it's different from other technologies, and like you're seeing every layer of the AI stack shift, the hardware layer, the infrastructure layer, the application, the middleware, like all of it keeps, jumping around. And so how do you approach that when you have to make these investments that you're going to be in for 7 to 10 to 12 years, and this is changing so quickly? Like, where do you think the moats are going to be, and where do you think value is going to accrue, and what's your perspective today?
It's a great question. Something we think about a ton. I'm lucky enough to have a leg in the world of how our company thinks about these things from an internal development standpoint, and that's really primed me for how to think about that from an external investment perspective. We're lucky also enough to have a longer term time horizon, as you point out. So I'm generally thinking, several years into the future, whereas obviously our internal teams are focused on, the next 12 months, for example. And so generally what I look for is definitely based on data. So I look for companies that are able to produce or get access to unique and high quality data, or they've built a technology asset that is well suited to derive specific and high quality insights on top of that data. So a knowledge graph or a small language model or an orchestration system that is well suited for the type of data that they would have access to. And then also just the last bucket there is like, a product that kind of puts all those things together well, delivers an amazing experience, and compounds in value over time as it gets more reps, as it sees more transactions or whatever activity on that platform is kind of the core unit of value that's being driven through there. So data, the tech on top of the data, and the experience to weave them all together that compounds in value over time.
You kind of have a nice, unique insight because you've been mentioning you've been in this kind of thesis for longer than ChatGPT's been around, right? Not just like 2-3 years of investment kind of thinking through this, but maybe over a decade now. What's like a key learning or maybe something that stood out to you today that maybe 5-6 years ago you had a totally different outlook, and now it's like so clear looking back, oh man, I should have assumed we were headed this way. What's been kind of a key learning?
Yeah, I think I'll take a little bit of license to pivot that a little bit to what has surprised me, and I think it is the pace of the actual conditions on the ground versus what I think you would guess the pace is based on your media consumption or the things that you would read in different articles. I think things are certainly progressing rapidly in terms of what's possible, but I actually think the pace of adoption and the real value creation is a little bit slower than you might otherwise guess.
That's a great point.
Right? Like, to my point earlier, these are tools, and it takes time and energy and expertise you have to invest in these tools to become proficient on them and to derive real value from them. So I think there are many products that demo very well, but the reality on the ground still is that the value that they're able to create is enough to get everyone excited, but not enough to kind of fully rely on and kind of go all in and just scale and be like, AI is just going to take over a function, for example.
Yeah, great headlines, but not great substance. I think you brought that up on a previous one, like most pilots fail, right?
Yeah, I think we talked about, there was an MIT article. That article got some criticism, but that said like 85 or 90% of these pilots fail. But I think your point's right. I think a lot of what happens is, you see a demo and you're like, wow, this could automate this workflow. And you realize it can automate 60% of it. And we still need a lot of humans. And now that we scale that 60% faster, we actually need more humans initially to evaluate it and verify it.
It's like whack-a-mole.
Totally. Which is fine if the outputs are still substantially better and you can get there more effectively. And then over time, you have attractive unit economics for a sustainable business. But if the unit economics are upside down and you'll just never get there, that's obviously problematic, right?
Speaking of unit economics, and I've been dying to ask you this question the entire time so far. So Thomson Reuters Ventures is invested in Spellbook AI. It's a legal contract automation company. I'm sure you can describe it in a lot more detail than that, but lots of legal tech today is getting criticized for cannibalizing the billable hour in terms of lawyers not being incentivized to use a type of technology if it's automating their work away. I'm curious what your reaction is to that type of criticism and how you think you see firms like Harvey or Spellbook evolving in that kind of world.
It's a great question. And so, this is one of those areas where, as a venture fund and someone focusing on the future, I get to have a little bit of a license to kind of be creative with my answer here. But like, I guess the way I think about it is I don't think cannibalizing the billable hour is the right frame, because I'm not sure the billable hour is like the most effective structure for legal services, right? I think there's, many reasons why it's not ideal, actually. I think the way to think about things is what are the value unlocks that this type of technology can bring to the table for legal professionals, right? It's, there's when I think about what's possible with some of products like Spellbook and some of the other legal tech products and what we have internally with co-counsel and some of the products in the market are these are basically scaling technologies. These are technologies that can make a professional services firm like a law firm substantially more effective. that you can take on more work, you can take on a wider variety of work because you can augment the professionals or the practice areas with these types of tools. You could, go into different areas. Like if you think about like an M&A transaction, for example, the law firms only handle the legal documents, but the unit of economic value is the M&A transaction. That M&A transaction has a variety of different aspects to it that need to be done in diligence. You have to review the code, you have to review the contracts, you have to review the financials, you have to audit the financials. All of that type of work gets farmed out to different professional services organizations. And the reason that those different organizations exist is because humans have barriers for what they can be experts in, right? It takes years and years and years to become proficient in all these different areas, but AI doesn't have that type of limitation. And so, we could live in a world where M&A and a transaction is the thing of value, and a professional services firm can handle that transaction from end to end, right? And that, I don't see any reason why that firm couldn't be what we might define as a law firm if you thought about it from first principles as a technology company. Yeah. So, is the billable hour even the right way to think about value creation in a world like that? Or is it based on the output that a firm is able to create and what the value of that output is to the constituents that participate in that transaction?
Yeah, I think you're exactly right. I think time-bound business models are going to be a thing of the past, and what's most aligned with the value is kind of volume-based. Like how much value are you delivering versus how much value are you delivering in an allotted amount of time?
Totally.
But I think you hit on an interesting point that I haven't seen a lot in the market yet, but that strikes me as correct, which is like a lot of these service providers that work in an industry like M&A are going to, form groups that do multiple parts of that value chain that they didn't before, because they can each use AI for some of it, right? I think you've seen a lot of, like legal, PR. I've seen some M&A groups that try to use AI and then make it like, bare bones. Like we can do a, $1 million M&A transaction and make money on it because of AI. And I think they've found that hard. And I think the same is true of like some of the PR firms that have tried this, but it sounds like if you put all those together, right, and now you're getting this value from like applying AI across multiple layers of the stack that you couldn't do before because of the specialization problem like that could be a really valuable play that I've not seen much in the marketplace.
I think a lot of friends that I have that are they just graduated with their law degree. I'm 32 years old, so they're in their earlier side of their law career. They're either very excited about some of these tools, and they're going to be one of the first to expertise themselves with AI support as a lawyer or some type of other professional services. And then the other half are like, it's really hard to get a job because all these firms are now just automating entry-level positions. Do you see that internally when you think through, how that company is growing? And how do you feel about the entry-level kind of conundrum with some of these AI tools?
Yeah, I mean, look, I think I'm an optimist, obviously kind of have to be in the VC world. Yeah, yes. I think the opportunity outweighs the negative impact of like there being more limited specific types of jobs. Like if you look at the number of legal AI companies that have been started over the last 3 years, it's exponentially more than have been started like in the entire history of legal tech. Obviously, I'm being a little
You might be right though.
It's something. Yeah. It is ridiculous. I mean, it's since 2023, it's been like $7 billion invested in legal tech. Yeah. Right. I mean, like that's a substantial amount of money. So like the young professionals coming out of law school, like I would be so excited if I were them about what the opportunities are to create value in the world, right? I mean, that's the great thing about lawyers is they're so well trained and such experts in their fields, and they have so much potential, I think, to work in many different fields, and many lawyers kind of start in law and kind of move into many other different
So
areas.
Will we see people in the kind of, hey, I'm applying for jobs, I just graduated with my JD, and on my resume it says Spellbook or it says Harvey. Like, is that 100%. Like a tool that you see on people's resume now going into the workforce?
I think it is absolutely going that way. I mean, just the way that like we used to put like Word and Microsoft Excel and like PowerPoint proficiency on like the bottom. Yeah. Like you kind of have to put like Python and Claude.
Yeah.
Right?
Yeah, no, it's very interesting to think about the future of what is on a resume with all these new AI tools.
Yeah, or is even the resume the right artifact to, explore value for, human's professional experience.
I just think it's interesting that you use the phrase "the great thing about lawyers." We don't hear that very often. So,
Hey, my sister's a lawyer. Sometimes they're fine.
all right, there you go.
We love lawyers
He's
at
okay.
Thomson Reuters.
Let's move on to some of the articles of the week that we have to talk about. You want to go first, Anna?
Sure, I can go first. This is a fun way to spice things up a little bit. So here's an interesting article that came out of BBC, surprisingly, titled "The People Turning to AI for Dating and Relationship Advice," citing a recent study by Match.com saying that almost half of Gen Z said they have used LLMs like ChatGPT for dating advice, which is more than any other generation. Okay, my first reaction to this is kind of duh. Like, obviously, the younger generations are more likely to rely on LLMs for any kind of advice, let alone just dating advice. So I find that a little bit fundamentally unsurprising. But I'm also sure that dating services like Match Group are already using this type of these types of fundings to basically gamify gaming or dating, similar to what happened with mobile when things like Tinder or Hinge first became popular. So my personal stance is that I can guarantee you that these types of apps will come out with some type of feature that allows your AI agent to go on first dates with another person's AI agent. And I guess my question for this broader group, Rob, you mentioned you were single. Maybe you want to take the first stab at reacting to this.
Yeah,
But
you
how do you
asking
feel about that
ChatGPT?
feature? Yeah.
No, as the one single person at the table, no, I would not do so. I think I invested in a dating app once, and I've looked at a lot of these companies, some even recently. I think it's a hard problem to solve with AI because it's I think the relationship between any two people, whether it's dating or friendships or work relationships, they're very idiosyncratic, right? And like dating is a thing where like you could date a person who has a quality and you don't like that quality in that person, but in another similar person who has that quality, but their mix of qualities is different, you could actually like it in them, right? So like it's weird.
It's not much of an analytical problem that you can just like feed data and all of a sudden like it'll give you the golden truth.
Yeah, and then if you're gonna ask ChatGPT for advice, you're gonna get, this is a statistical web trained on the data of the web, and so unless you're trying to date somebody who's like very, very average and just has the general, which most people aren't. Most people stand out, they're average in a bunch of ways and they stand out in the pockets that make them special. And so like ChatGPT is not going to pick up on that or know that. And so I think that's going to make it really, really hard to give good advice. And then a lot of the things that like as these things get into the matching algorithms, I'm not sure they're capturing the data that matters. Like I know some people know immediately if they like somebody. I typically have to go on a couple of dates because I'm trying to get at things like I always joke, like I want to know, are you going to yell at me in public ever? Do you think that's acceptable in a relationship? Because, and who's going to put yes? Like nobody's going to put that, right? It's like if you ask somebody like on a dating app, like, are you open-minded? Like 90% of people are going to say yes. And like 20% of people are really open-minded, right? But everybody thinks they are.
And
then
self-perception is not an easy thing to
and so I'm not sure they
qualify.
have good data to do the right thing,
Have you studied this at Thomson? Sorry to cut you off. You studied this internally?
I mean, look, as someone who's average at most things, I would just say like I would be careful at what I would outsource to other systems. Like when was the last time any of you guys read a map?
I love maps actually.
Okay.
So I just had it open.
He just does that for
I just
fun.
went hiking. I literally had a map open. I had my compass out and everything.
Ryan's are like
you're
before
the-
bedtime,
okay.
like just looking at a map for fun, memorizing
do.
the geography.
But
of
the point
Middle
is,
East,
we mostly use GPS to get everywhere we go, and used to, know how to use a map. And I would just say, like, if you don't use a skill, it atrophies. So, like, I'm not sure that type of relationship interaction is the thing I'd want to be outsourcing and like let atrophy. Just because I'm
every time
already-
your significant other says like, we need to have a talk, you go here, you turn on ChatGPT and
just fall asleep. Yeah.
I mean, I think that's a really interesting point. I think it's less of a data problem and more of a fundamentally human problem. And I think that online dating in general, this is my personal stance, especially in the context of AI, is teaching us, and especially the younger generations, to be avoidant of dating in person and avoidant of rejection. Which I think is like completely antithetical to the spirit of being in New York and the types of reasons that the city is
the
so
city
beautiful.
loves
Like,
rejection.
you can, exactly. I can go up to a stranger in a bar and strike up a real conversation that may or may not go well, and like maybe I'll get shot down, but That's fine.
So-
It's a
so the
fundamentally
article-
human thing to do.
The article didn't mention this, which I thought it really should have. But last year there was a company that blew up, and it was one of the ChatGPT like offshoots. You can make your own kind of GPT, and it was called RizzGPT, and it absolutely crushed it. It got to millions in revenue. The founder was a solo builder, kind of almost built this over the weekend thing, and it basically just API'd into your Tinder or something, and you could hit the button and it'd come up with like, you know, a nice catchy way to ask a girl out, or
Yeah.
like a nice personal, oh, I see that in your photo you're wearing this, and it said something funny about it. And, you know, I kind of thought it was actually a very quirky and funny idea for maybe people that struggle with communication, you know? But the article didn't mention that, and I very much felt like if you're having fun with it, maybe it's not the worst. If you're making it a very serious game, maybe it could be damaging. But I don't know. How did you feel about the idea of like a RizzGPT helping you do, you know, pickup lines?
Oh, I think it's just kind of pushing off the inevitable. Like if you were an awkward person, totally fine. Like it can
If you're
happen. It's
Anna and
normal.
you're an
If
awkward
you are
person.
me and you're an awkward person, like I can go rizz you up, and then eventually you're gonna find out that I'm an awkward person, and so it's kind of just kicking the can down the road.
So I mean, I did this when I first got divorced. Somebody told me there was a class at Harvard that would tell you how to optimize your dating profile, and he gave me all the pointers. And so, like, one of the things you're supposed to say as a man is you're supposed to say, "My friends say I'm blah blah blah," because then women go, "Oh, he's got friends," and you know whatever.
He's
and
got friends.
That's an endearing trait.
Wow, what a catch!
And so when you optimize your profile to get the most number of swipes, what ends up happening is you just go on a bunch of shitty dates, right, with people that
Yeah.
you're not really a match with. So it's actually better to take a stance on things, and like a lot of people are gonna screen you out. But you know what's interesting about this though is like think about the three of us, right? So I met each of you at a conference, and we talked. I talked to lots of other people at that conference. Like, why did we become friends? Right? Like you and I started talking about hardware and just like
Yep.
hit it off and whatever. And like, would an algorithm have matched us or told us to talk to each other? Like, probably not.
Yeah, and it would have matched us maybe with hundreds of others, and it'd be like
Yeah.
fishing through it as well. So yeah, I feel it. But RizzGPT, I thought was a good idea. I don't know if it even is still online right now. Do you have any thought about RizzGPT?
Look, I think organic rizz is better than synthetic rizz.
Oh,
Oh,
you heard
there
it
you
here
go.
first.
Yeah,
All
there
right.
you
That's,
go.
I'm gonna get that tattooed.
So,
That's good.
you know, I'm happily married, so I'm very thankful that I'm not
Yeah,
out in this game
He's not in
anymore
the
because it
dating
sounds
trenches.
terrifying.
Yes.
it is
I
terrifying.
think that, I mean, I don't know if anyone else has noticed this. I have noticed a big generational counter reaction against online dating, especially from Gen Z.
Yeah.
One of my good friends is an IRL dating service. It's called Met Through Friends, and it's absolutely caught fire over the last year in New York City. I think in particular because companies like that aren't intentionally trying to scale. They're trying to return authenticity to dating culture, to teach people it's okay to put yourself out there. It's okay to get rejected, God forbid. And it's actually a fundamental part of being human. So I think we should keep that all in mind.
Well, that's LLM dating. I do
Yeah.
want you to bring up the article of this massive round. It must have hit your timeline. Bring up the $300 million seed round. Yes, that's a seed round. What is
Yeah.
going on here?
Yeah, Periodic Labs. So they raised $300 million to build, to automate science, and which sounds pretty challenging. But one of the things you have to remember is LLMs are statistical machines, and science doesn't work that way. And so you're going to need a new set of models to really do this work well. And I think, and these are like top tier AI people, but I mean, man, $300 million is a lot of money to get started with.
Seed round,
Seed
300
round.
million.
Who's the team though? I think is the question. Is there's
They're
got to be
top
It's-
researchers.
yeah,
so there's got to be
Fine.
some
Yeah.
so it's got to be
Yeah.
It's
someone.
probably people that were on Zuck's call list when
Okay.
he was building. Yeah,
Yeah.
it's people
Right.
like
They
that.
turned down the $1 billion offer maybe,
Right.
and they kind of used that to leverage for evaluation. But nonetheless, you know, forget like it's a $300 million round. I think the ambition of call it automating science. I also think it's fundamentally trying to break through some technical challenges that scientists have. For instance, my girlfriend is a master's lab chemist, very, very hardworking in trying to do all this different, you know, experimentation. I'm sure she could figure out how to go faster with some of her R&D with one of these kind of, I don't want to call it scientist co-pilots. I don't know how they dubbed and branded themselves, but have you seen this company pop up? Because it was one of the biggest rounds, I think, to date out of all the seed rounds this year. It's a massive round. Did that come across your timeline?
Yeah, I mean, we generally keep track of all the large funding rounds that happen. I think like generally when I look at a headline like that, when there's just huge number, to a really early stage company, I kind of instantly get a little bit skeptical, because the thing about companies is that they have to be able to make revenue and generate profit and have a viable business.
Who would have thought? You heard that here. Even if you're an AI company, you need revenue and a good P&L.
But they also might need,
take,
they might need $250 million in compute to train these models. So that's a weird situation for a startup.
Totally, but like, do we need it all up at? And look, I don't know if this particular startup needs all that money in the first 6 months of operations, but generally, even like with highly technical deep tech startups, like you would want to see some technical milestones be achieved before you would back up the truck, right? So like maybe what could have been done for $50 million is kind of my question. Like, obviously it's a super technical challenge and probably a very hard thing to do, and if they can automate science, then that's obviously a great thing for science and humanity. But there is a negative side of that, where if in whatever period of time they spend a lot of that money and don't make enough progress, it's pretty problematic for everyone involved.
Well, what was the hope with OpenAI? We're going to cure cancer, and now they're doing risque novels. So you never know where the hope starts and where it goes.
Yeah. And I would say, just in general, having watched I've been doing early stage investing for about 11 years now. And I would say that most of the time when somebody raises a monster seed round, it does not work out, right? You look at like Magic Leap, you look at, what was the COVID, the real-time chat thing, Air
Clubhouse?
Something. No, not, Clubhouse is another one.
Yeah.
Air something, Airtime or something.
Yep.
There's a lot of these. I think it can be a negative signal sometimes.
Well, I'm hopeful for it. They're
some of
really,
like Anthropic's
talented.
done really well.
Totally.
Yeah. I feel, to your point, big optimist. I think we all are optimists at this table. I'm just always curious, like, what is the first milestone that I get to see under the hood?
Right.
That it's like, okay, this makes sense.
And there's a question of like, is that business model one that should be venture backed in the first place? Like, I think that's my bigger question right now.
What
Go ahead,
would
Joe.
it otherwise be?
Yeah.
Yeah, maybe it's a research lab for 5 more years, right?
That was the OpenAI model.
Right.
People forget, they're like, I think Sam Altman said they broke like every rule and every piece of advice he's ever given companies. I mean, for 7 years they were a nonprofit, and maybe they still are.
Yeah, well, we'll ask Elon Musk about that another time.
Yeah. Cool. Well, let's move on. We've got an article here about AMD. And so to give you some context, most people, AMD makes GPUs, if you don't know that. And a lot of people have wondered why AMD does not have the kind of financial, success that NVIDIA's had. So
I think Wall Street Journal also posted it's like still 92% of the market goes to NVIDIA.
Yeah.
So how is AMD not? Because they're a massive company too. Put all respect into AMD.
Did anybody read the book? I think it was called The Thinking Machine or something about the history of NVIDIA, right? So one of the interesting things that they did was CUDA, the software. Mm-hmm. And I think for the first 5 or 6 years of existence, Wall Street was very critical. I think at one point they had a hostile investor who wanted them to stop making CUDA because Jensen Huang called it a $0 market or something. Like he's just like, they're like, who's the customer for CUDA? And he's like, nobody, like right now. But someday they will be. Like he just had faith that they had to build it, and that's a really hard thing to convince Wall Street of over the long term. And so, but they've got all this experience. CUDA's 20 years old, and so even though AMD's most recent GPUs, they contain more HBM, high bandwidth memory, which is like stacked DRAM, and what that allows you to do is run bigger models. So you can run. So if you have a model when a model gets to a certain size, it can't run on a single GPU anymore. You have to shard it across multiple GPUs, is the term that they use. AMD can run bigger models, but their software stack is so immature compared to CUDA that's why they've been losing. And so I think what changed is a really great research blog called Semi-Analysis. And they wrote this piece in, I think it was like December of last year, maybe January, about how much AMD software sucked. And they went through it and they were sort of like, we tried to make this work and here's like all the bugs we hit. and they published it, and enough people read that it got the attention of Lisa Su from AMD. Apparently, she met with them and then put a Tiger team on, like, go fix this shit.
Yeah.
So some of what you're seeing now is, I think, they're starting to catch up on the software side.
And I do love that there's familiar kind of rivalry there, right? I think they're like first cousins,
Yeah.
right? You know, from Taiwan. So it's very interesting to see that kind of, you know, family tree of the two most dominant kind of players in architecture for computers. You must have had your company write about this deeply. What's your opinion here?
Look,
can AMD pull up and even compete with NVIDIA over the next coming years?
Look, I think the market has, to some degree, already spoken here. Like, and I think like Brad Gershner has been talking about this past week. Like, you know, I think it was 2017 to now, both NVIDIA and AMD had like about 30 billion in revenue at that point, and now I think NVIDIA is something at like 300 billion, and they've captured all of the incremental dollars that have gone into the space. And I think CUDA has a lot to do with it. It's, you know, the full stack solution from the hardware to the software to, you know, the developer community that works on that. And so, you know, the market has voted with its dollars on, you know, which company has the better solution. I think, you know, there was a point where NVIDIA was going to acquire that company. I think there's pretty negative overhang on, you know, not having that acquisition have gotten done. I think the development time on chips is like very, you know, there's very much like an entrenched advantage there. Like, there's a 2-year development time period. Like, you guys probably know this actually better than me, but like that 2-year development period for chip design, like, you're making bets on what the future kind of standards will need to be. And you either get that right and become the standard, or you don't. And NVIDIA's gotten it right. And like I said, I think the market voted.
And the stakes for that are so high because you can extract the maximum amount of value for a given generation of chips in like 6 months. I know the depreciation cycle is technically longer for that, but you get most of the value in 6 months.
Yeah,
It takes 2 years to design. It takes 2 years to build a data center. Like, how do you make that math work?
Yeah, I was an NVIDIA fanboy growing up. I played computer games, so I've built many computers. I have my NVIDIA running in there.
Did you buy DGX Spark this week? They just came out.
Yeah. No, I haven't broke the bank for that yet.
All right.
But I recently switched from an Intel CPU to an AMD CPU, because obviously they do more than just GPUs. But I think they're trying to tackle a lot of different markets, whereas, you know, NVIDIA, specific type of architecture, we're just going to go all in on it. Have you taken a position on AMD's trying to do too much across too many verticals, or it's actually a very smart game, but it's going to take years to kind of capture those different markets?
Look, I don't think I have a strong position on it, although like what NVIDIA seems to do, that specialization does work in a lot of different markets. You know, the vertical focus for them, owning the hardware, owning the software on that, and then, you know, the data center business as well just seems like, you know, a really hard advantage to overcome, right? I mean, you have to choose where you're going to deploy capital, and you have to, you know, the other thing that I'll say actually about NVIDIA is we see them much more actively in the startup investment environment. Like, we've done deals with them. We've actually, one of our portfolio companies was acquired by NVIDIA, so they're much more active and aggressive.
Which one?
It's not publicly announced.
Okay,
but,
all right.
It's a model optimization company, so they basically help choose which software chip is the best and well suited for a specific model. So, you know, but just by virtue, I mean, like, that's what the compounding benefit is of that revenue growth. And you get to operate from a position of strength. You have more optionality. You can build on that competitive advantage, and I think NVIDIA has definitely done that.
So we got one article left. We just got a couple of minutes to chat about it. It was written by Kyla Scanlon, fellow Louisvillian, I found out. Maybe we can get her on the show if she ever comes to New York. But it's called Politics, Capital, and Attention, and it's about the fact that AI is the market and the market is the government. And she's trying to tie AI into this idea that, like, kind of like, how is the economy doing? We were talking before the show about this, that in Q3, AI infrastructure spending was more than all combined consumer spending in the United States. And so you're in this weird thing where, you know, because this is a very political article and it's very critical of the Trump administration, a lot of like tariffs and H-1B visas, prices and all these kinds of things. And it's like, well, but then look at the stock market. And I think you have to remind people, the stock market gains are mostly like a handful of companies, 20, 30, 40 companies that are very AI centric, that are driving it all. Those are the ones going up 70, 80, 90, 100% per year. And the rest of the market's sort of bobbing along. I've read some things that like 2/3 of the economy is actually in a recession right now. And so how do we untangle this, or like, does it matter?
So much to say. You have a thought?
Yeah, I mean, I think we were talking about this the other day in terms of the circularity around AI right now. And I think it's definitely bubbly in nature. Like, I think we're approaching some type of bubble when NVIDIA is investing $100 billion into OpenAI to buy $100 billion worth of NVIDIA chips. And simultaneously, OpenAI is committing like $60 billion to Oracle that it doesn't actually have yet. And Oracle.
But then I saw Oracle's committing to AMD as well. So there's like a lot of spider webs going on here.
Oracle is their debt to equity ratio is like 500%. It's absurd. So like there's something that is going to happen at some point,
Very
whether it's now
Enron-esque.
or later. The question, and I think the article does a good job of posing this, is if AI is a bubble, does it even matter? Because it's making stocks rip, it's making private valuations rip, and the public is taking that as a signal of confidence that the market is actually okay. And because the public is doing that, the government, at least this article alleges, has leeway to take more political risks, including tariffs, without it destabilizing the entire economy. Like, is that sustainable?
Well, one of the major kind of practical things that we saw was Intel's deal under the Trump administration, right? Taking 10%, and that's, reshoring manufacturing of very critical semiconductor research. I felt like the article was very critical, but it also brought up more questions that I'm sure, you've spent time thinking through of like, is it okay to not just be a capital-focused decision-making nation? Is it okay to think about adversarial kind of positioning over the next 5 years? One would say free markets should be how we always think, and that's why capitalism has been, the greatest force of good over the last, couple centuries. Others saying, we're in a different time period, especially with the rise of China. How do we feel about governments getting involved with capital decision-making kind of forces? Yeah, big question to take on.
Yeah, look, well, I mean, I think there's a lot there to unpack. I'll start to take some chops at it, but I think like the first thing about the spend and investment, I think, is there's a reason that these investments are being made. And I think when we talk about like, is there a bubble or is there not a bubble, and what needs to be true for these investments to play itself out, I think we have to sort of contextualize that in the value of the market opportunity that exists. And I think we're just in a transformational period where, we've lived in a world where the entire software market was worth $300 billion maybe. And we're talking about the professional services market, which is, in the tens of trillions of in services in general. So like the magnitude of the opportunity is substantially more than the SaaS market. And so when you think about the level of investment going in relative to that opportunity, it doesn't necessarily seem inappropriate. Now, are valuations out of whack there? Yeah, like they are. And, like there will be many companies, likely in kind of like a messy middle of the market that, don't kind of reach their potential and ultimately have negative outcomes. But there is real value being created, and there will be a portion of companies that do get it right and create substantial value and will justify, I think, the amount of spend. So I actually take kind of the other side of, is there a market that I think I commonly hear, which is I actually think we're underestimating the amount of value that will be created over the long term with AI. And so, that doesn't mean that there won't be like substantial market pullbacks. That doesn't mean that the market will be completely insulated from geopolitical activity. Like obviously the world's a complicated place. There's tension with U.S.'s relationship with China. Obviously Russia and Ukraine is obviously still a problematic issue. So like the world will never be perfect. And yeah, like could there be things that substantially shake the system or shock the system? And is the broader stock market being propped up by AI investment and the performance of Magnificent Seven? Yes, probably. But the long-term opportunity and value creation that I think this investment will drive towards, I do think will at least at some point kind of push us through whatever trough to peak that we'll go through there.
It almost reminded me exactly of the moment where I think we've all read Adam Smith's Wealth of a Nation. I think people forget that it was written in 1776, obviously the same year of the American Revolution, Right. So imagine wealth of nations, maybe the hallmark of capitalism, modern capitalism, was written the same year of a major geopolitical occurrence. I don't know if that was coincidence. I don't believe it was, having studied a bit. And so I think we're in that same time period of wealth of nations. It's titled that, but it's about capitalism. So I think countries that are capitalist are trying to figure out how they position themselves and jockey on the world stage as a force, not just a function. I know we have to wrap up.
Yeah, we got to wrap up.
Why don't we ask our final question here? What do we got?
Yes. So everybody give 10 seconds to answer. We always ask a question about New York.
Okay.
And today's question, which we meant to do last week when we
Yes.
had Eric, the massage robot, but it's about sort of stress and peace and calmness in New York, which is, this is a city of energy, lots of stuff going on. Where's the place that you go to find peace, to find your calm?
All right, so I'm a native New Yorker. I live on Long Island now. This is the disclosure, but my family is from Williamsburg, Brooklyn. My family lived there for 100 years. My great grandparents came over from Italy, and they built a house there, and many generations of my family have lived in that neighborhood. It's obviously changed a ton with a lot of the development there, but there are a couple of places in the neighborhood that have always just make me feel better and calm. So there's a place right off the Bedford Avenue subway stop called Joe's Busy Corner. That's my Uncle Joe was the original Joe for Joe's Busy
No
Corner.
way.
The OG Joe.
The OG Joe, exactly. And so I'll put that as like one of the areas. And then, like from there, a couple blocks down to McCarran Park, for sure, is like just an area where I always feel calm.
Beautiful. What about you, Anna?
New York Public Library.
Oh, that's
Architecture's beautiful, great natural light.
Yeah.
Love to go there anytime of day.
Mine is related. Mine is the basement of Strand Bookstore. And it's the Union Square, 11th Street, 12th Street, wherever that is, Strand. Best selection of used technical books in the country, and it's calms me down to go there.
Yeah, find me next to the fountain in Madison Square Park. It's awesome. It's a great spot. Everyone knows about it, but I don't think people use it to like just get some zen. But it's awesome. It's nice background music, nice background noise, but very happy there.
Yeah. Well, Joe, thanks for being on today. I think this was great. Everybody out there, thanks for listening. Please send us your merch, subscribe, like us, leave a comment, suggest a guest, all those things, and we'll see you next week.